what are we at? May 15th, and we're a little bit after 12 Eastern. And I guess today is Thursday as we close into the end of the week. And we roll into the weekend. But it has been kind of a crazy week, both in the crypto market and the stock market. I think any market, probably even the supermarket, is crazy right now. But that is the world that we live in. But before we get into the real good stuff, I just want to go through a few housekeeping things. I want to thank the good people at FEG Token and SmartDefi.com for their support, and these were the people that helped this old man figure out what a digital wallet was, like when I first was introduced to crypto, and I've never forgotten their hospitality and graciousness, so we continue to stay friends. And our friends at BYDFi for helping us through this and providing our trading bonuses as prizing. You'll find that the most recent winners would have received an email today or the day before saying that that bonus is in their accounts, and we will continue to do that. As all you have to do is sign up under the Blunhouse TA link. The code is capital K, 5, capital Z, 4, capital T, small p, or if you go to @Blunhouse TA on YouTube, in the description you'll find all kinds of great details like that link as well. I want to thank Ben for joining us again. I think, Ben, this is your second time now, I think. We tried to pull one off before and I think technology got in our way, but
yep.
we're glad to have you here
Yes,
today.
second time, and glad to be here. Thanks for having me again. Glad to be part of it.
Well, listen, I think it's great that we can all share our stories. Like, one of the reasons that we do this is so that we can learn from one another. And the only way that happens is that if we kind of open up ourselves to feeling and looking like we should have known better from time to time, and sharing those experiences as well as the good ones, right? Where we've learned, hey, I found something really cool and I want to share it with everybody because I think it can help you make some money or stay safe in a trade. And when you and I were first introduced, it was because of the scripting that I was doing, and I quite honestly was probably making it a little more difficult than I should have been in so many different ways. But I was kind of fascinated to find out how you started scripting and why, and I realized that there were some commonalities that you realize over time that
Sure.
less is more.
Less is definitely more. I mean, and just to dovetail off that point, I found a strategy that worked, and the reason why I dove into scripting the learn to fish stuff was because I was missing entries. It's like, all right, well, the curl, the crossover, and I'm doing, a day job. I'm not a full-time trader quite yet, and doing other things, screwing around, looking around the internet. And I'm like, oh crap, I missed that entry. Oh crap, I missed it again. I'm like, you know what? I do write computer code, so I do that for a living. So why don't I just write some code? And I wrote it for myself, and it showed it to a few people, and that amazingly sold a few hundred. Never thought I'd create anything that would sell multiple hundreds of things, but I did. And yeah, I mean, it's another tool to get, to help you out with your trading and staying in trades and whatnot. And you can't overdo it. But I think that the stuff that Blunt has here is fantastic. I mean, the 5/7 stuff is great. I'm really curious. What are your yellow lines you got here?
So actually, this was just me in here on different time frames. I knew you were going to ask me that, and I think what I was looking for is where may price go based on where it's been, and I am just kind of flipping through different time frames and looking at past price. So that's kind
Right.
of where I'm going, just to see if I can find some ranges. But this thing, I know that we've talked about this this asset before, and not always are we in the right place at the right time. And I think one of the takeaways that I have since I started, because look, the script is basically a representation of my trading methodology, like as is yours. And I started realizing that in order, it's one thing to be at the right place at the right time. It's another thing to know what to do when you're there, right? And that's what the script does for me. It says, hey, there's something going on that you might want to pay attention to. This just happens to be the 4 hour, but you can see the consolidation that it was coming out of. We know that price will either drop or pop as a rule when it comes out. And this thing started to take off and just kept going. It just kept going. And, to your point,
I wish I still had the shares that I bought last Saturday that were under $1.
exactly.
And I should say shares, the contracts.
Yeah.
But on Saturday afternoon, I caught one using the method, and one of the things that I'm able to find the entries relatively well. One of the things I'm still trying to kind of work on is, why did I get out of that one, and what can I do better next time around to not panic when you're looking at the P&L when it goes from a high number to a low number, right?
Mm-hmm.
And I think that's something that's the hardest. The exit's always the hardest part in trading. The entry and when it goes, when it moons, whatever, anybody
Right.
can do that. But it's okay. The decision point, right? It's like,
Yeah.
all right, well, what do I do? Do I take profit? Do I take a little bit of profit? Do I trailing stop? So that's something that I think that those conversations can help pretty much everybody and are great reps for anyone that's trading in general at all. So,
Well, to the point, and this is what I like about doing these live streams, is that we can look at this stuff in real time and get an example of why we use multi-time frame analysis. So this is still ETHFI, and you can see that there's a little bit of up and down volatility here, right? But as soon as we start to stretch out our time frames, we get a better idea of what we're looking at. So once you're in the trade, let's say you even entered off a 1 hour, either right out of the consolidation, which is probably a little bit hopeful, but let's say you entered off the 4 hour, like a lot of us do that want to be in trades for a while. You entered off the 4 hour. Once you're in it and it's going the right way, and you get into a situation like up here where you have to make a decision, how do you manage that trade? Because this is where a lot of people will say, okay, geez, I'm going to take it off. Well, stretch out the time frame. Is the trend telling you that it's still intact? Yeah, that divergence is still there, so you're good, right? And that's one of the ways or techniques that I use to try and help me manage those exits. You're not always
exactly.
perfect, but the better you get at saying, oh, geez, we're coming back to the T-line or the 5 EMA, this could kick higher again, like when you get that sideways stuff like this, boom, every time.
Yep, and that's exactly how I do things when I'm trading, well, just in general, but support on longer time frames, right? So if you're trading, like you're making air quotes, you're trading the 4 hour, right?
Mm-hmm.
So you're usually I use 3, right? So I'll use the 4 hour will be the anchor, and then I'd say use the the daily and the weekly, or maybe in crypto it would be better to use the 12 hour and the daily, right?
Mm-hmm.
And my 4 hours my anchor, and then when I start to see, I'm like, okay, are things are flattening out here? Are we going to reverse? Should I exit? What should I do? You go out to the next 2 time frames, just take a look, and like Juan just said, you can, and I do it with the MACDs, but the same same thing applies here with the 5/7 is, what, all right, fine, this current time frame I'm on is unsure. What are the supporting time frames? Because the amount of buying and selling to flip around the 12-hour, daily, weekly is massive.
Yeah.
The longer the time frame goes, the more buying that will need to happen on the opposite side to flip said time frame.
Yeah. Which translation is a lot of money.
Tons of money. A lot of money's going to come in. So I mean, so that's one big thing, and then the other thing too is the volume profiles are brilliant. I took a trade yesterday or the day before, and then I brought up Grok on Twitter, right? AI component. I told it what I did. I said, I said I got a volume profile up. I'm like, talk to me about, I want to learn and dig into volume profile, and again, and it's amazing what it spits back out. It's like, okay, here's your ranges, here's your your high value, your low value, um, things like that to get reps and trading. That's one of the reasons why I like trading the small amounts in crypto, because just the reps, just the actual, muscle memory. You look,
Mm-hmm.
you see, oh yep, it's there. I'm in. You don't delay. You're not unsure. You're not afraid. You just it's a this technique works more often than not. I'm in.
Yeah, and the other thing it does, and I just brought up the hourly chart of Bitcoin, right? So I'm sure you're constantly flipping, like from one time frame to another, which I always am doing, so that I don't get hit by something I didn't see coming. As long as I don't flip so much, I can't even remember what bloody time frame I entered on. So that happens. But what I want to show you is the ranges that get created, right? So you're up to your point about the value ranges, the upper and the lower. Is it an accident that price kind
No,
of wicks out there and then does the
when
same
the
at the bottom? No.
right when the volumes when the volumes are higher,
Yeah.
right? Those are your levels, and then when the volumes are low, it motors through those.
Yeah. In case in point, if we look at this is an hourly now of ETHFi, does this look like a staircase, right? Finally, there's the landing, first stair, second stair, third stair, fourth stair. How many more do we have?
I don't know how many more do we have. That's the thing. That's why I like being on the call side, right?
Yeah.
On the long side, because I mean, I think sometimes when you're on the short side, obviously if it's a bear market, I mean, you can make a ton of money that way too. But the long side, right, you have infinite possibility,
Mm-hmm.
which and we're bullish. I guess you'd say it's probably a bullish crypto market right now. Bullish to
It's
strong bullish crypto market.
well,
So
it seems to have been pretty healthy for some of the alts up until today, obviously. But if we look at Bitcoin just as an example, we sometimes get lost in the forest, right? Of getting stuck in the thick of thin things, and we're so focused on where's price going, and we're discussing minutia.
right,
Well,
it's a great point, because that folks get when folks initially start trading, they get a little, and I'm guilty of this too, is get a little too attached or affected by the P&L or the daily P&L. I only made X, or I lost Y today, right? And once you start getting past that and start looking at things in terms of weeks, months, quarters, years,
mm-hmm.
that's where you can kind of get off that, day trade mentality, and really start. I mean, look at the money you could have made here from 78 to 104,000.
Mm-hmm.
I mean, it's life changing money
Mm-hmm.
you could have made with perpetual contracts.
Yeah. Well, I think one of the things that this is kind of an opportunity. You talked about the volume profile and how effective you find it, and it's such a simple thing, and like it's probably one of the easiest things to read of all the technicals, right? That we have. It's very simple to read, but
Simple to read, but yeah, but for me, I'm like, it took a bit for me to understand. I'm like, all right, well, I understand the volume. I'm like, but why? The why, right?
mm-hmm.
And that's why I mentioned the and maybe this was just my a shortcoming on a Tuesday for me, or what have you. But that's why I brought up AI side by side, and I did a small trade, and then I told it what I did. I entered here. I'm like, and I gave it a screenshot of what I had up for my charts, and it said, all right, if where am I going with this? What are the, and it's amazing what it spits out, and what it spit out, was helpful to the trade, but more so, the bigger point was I learned a ton from it, right? I'm like, all right, this is exactly what that means. That's exactly what that means. And then, if you're one of those people that feels kind of strange asking a million questions, you can ask that as many questions as you want. I won't judge you.
Yes. Well, the cool thing about the volume profile, because it is pretty easy to interpret, really, um, it only has a handful of key elements to it that you need to be aware of. So when you take that, and actually I'm just going to switch to, whoops, ES for 1 second, and I'm going to go to the 1 hour. Okay, so once you find a handful of tools that work for you that mitigate risk and provide returns, you can start to try and kind of create your optimal setup, right? And I think this is what, as we, the more you do this, the more you realize that you will have a setup that fits you like a glove, whether it be long or short. And it ends up being in your interest to only pay attention to those setups, and everything in between, you either get chopped up or just don't turn out being very exciting, right? Like, I find that there's a few things that I can really monetize, because again, you have one job, and that's to monetize the chart, right? And this 1 hour of ES is a really good example. Volume profile on the right hand side, really simple. We know that the gray area is lighter trading than what we see in here. We know that that's the upper value and lower value ranges, and then the center is the point of control. Volume shelf, big gaps. We know what happens when price falls into the gaps. If I'm looking for a short setup, interesting. So I want to see, for me, if I'm looking short, I like where price will have to come back and test a shelf like this. And if you notice, there's a huge gap between the T line, 5 EMA, and price on this time frame. And that gap might want to get filled. And when it does, it'll take a seat on the shelf. Right, so that's the first thing I'm looking at. There's an opportunity for a reasonable trade on this 1 hour to come back and test these levels on a fill. However, if it breaks down and falls into this gap that is already light volume, it could fall hard, right? And this is where you can find yourself in a runner. And where would it fall to as a likely level? Well, current price will look for pass, so it'll obviously come back into here. If it doesn't hold, it'll look for the previous wave's low, which puts you in this lower area down here of the gap, which is essentially a shallow shelf. Probably won't hold price up if there's momentum down. And time again, we see price and come back and check the upper value range, because it's a draw for price and this is a premium.
So you don't consider the line separation that's increasing there to be bullish?
I do, but it can be an impulse too, right? Like, maybe by the time we're done this stream, this current candle will be closed. It'll be interesting to see what we're dealing with up here, right? Like, you're right that the chart is still expressing itself bullish.
Yep.
Right? But I'm just saying, if I'm looking for the optimal setup short, I like this push higher that has the potential to fail, come back and fill a gap, test a level, and if there's enough momentum, break that level, and then boom, you got a runner. If not, at least it's a reasonable trade. But, this is where yesterday afternoon you could have shorted ES from, roughly 59.11 to 58.70. If you would have recognized that you're dealing with what looks like might be a little bit of a bottom here, right? Go from the tops here to these equal bottoms, probably telling you that you're going to reverse. And look, stochastic RSI, Fisher transform, started to kick up there all at once. So yeah, this is a bullish move, right? But I'm saying for an optimal setup short, I'd like to see it fail and drop into the gap, and I'm just nasty that way. So
right, and you'll get in the stoke could come with as well.
Yeah.
So it looks like it might be crossing down there.
Yeah. But so that's what I find is great about using a simple setup, is that I know and feel very comfortable trading in and out of these gaps, or finding support on shelves, or using them as a draw for price. So we have the upper value range here. What is that? 58.22. Where's the 20? Where's the 50? Where's the 200? Oof. So what does this tell us now? Well, if we do fail up here and we come back and test the 5 EMA and or the T-line, I'm now more inclined to say that you'll drop and test the 50 or 20, which again is at the lower end of the shelf. And if you slip and fall even a little bit into that gap, there you go, right? That's your oh crap level. This would be a structural break on the downside if you were to get through here. We'll see, like, this is looking more and more doji-ish as we chat, right? At 2 roughly equal points in price. So if we want to see what this is looking like on a shorter time frame, because we're going to use the nesting doll approach, right? We're going to open up that 1 hour candle and look at it on the 15-minute, and this is what we find. There's the bottoms of the 2 candles on the previous time frame. Price, we're getting a little bit hot, but price has not broken. It just wants to climb up so far. If it rolls over, starts to test these levels, the question becomes, does it bounce and create, does this kind of create your center channel, and then it bounces, and then you have a little bit of a double top that we have to discuss at another time, right? That could be it too, but this is why we use multiple time frames. Our stochastic RSI has been running hot since this morning at 6 a.m. And, it's proven. We know that it can run hot for a long time, but price is telling us, and the divergence in these 2 levels are telling us that this bull run or trend is still intact. But for how much longer, right? Because this can only last so long. And, if your Fisher rolls over, for me, that's a tell. Moving average and signal line on the MACD are still above 0, so that's, more bullish things can happen than bearish, but eventually it will roll too. Where you get really concerned is when it breaks 0. It's a 4 hour. If you look forward, the 4 hour does look bullish. Look at your MACD on the 4 hour. Moving average and signal line still above 0 on this time frame. And does it look like it might want to kick up a little bit? Yep. Where did it find support? There's a shelf right there, right? To the right. The shelf was created by this little bit of a bench of past price. This gap up and all this big exuberant trading created another gap. Consolidation creates the shelf.
So you find the 1 hour, 4 hour as the best places to kind of determine your shelves, so to speak? 15?
Yeah, typically yes. But, quite honestly, sometimes if there's been a lot of volatility, these levels, like, you look at the distance between the 50 and the 200. The 200's way down at 98.7. The 50's sitting up at 102.6. Huge gap. But the principles of our analysis in how price moves doesn't change. Break one level, find the next, right? First test of the 50, did you get a little support? Yep. Where do you bounce to? The 20, the previous level. Now, if it comes back to test the 50, this is where it gets a little sketchy. because if it fails, we've got this gap here
Big gap.
that's falling. Yeah, big gap. It's like,
Yeah, it'll fall under 100K if it doesn't support that.
yeah, like there's your upper value range at 97.8, right? So just keep in mind that everything above the upper value range on the time frame that you're trading is essentially considered a premium on that time frame.
Yeah, yeah, right.
Right.
Logically,
Yeah.
I mean, there's no way. There's no way around it. If you're above the point of control, right? It's a premium.
That's right. And again, where it gets really slippery is if you're trading in that area where there's all that gray on the right, because it's kind of light trading to begin with.
Right. Well, and especially like in a case like ETHFi where it hasn't seen this level in a while, there's no volume shelf to refer to.
Yes. So that's where you kind of have to dial your time frames back in order to get something that you can work with. There we go. This should give us something. So this big giant green candle here created this gap. So when price comes back to fill the gap, logical place for it to try and test is somewhere along the 5 EMA and or the T line. Right, the T line is probably the more critical of the two. If it was to fail the 5 and doesn't hold the T line, that's a whole other story. Well, then we're having another conversation about other things. But this is what you would expect it to do. So here we are, and this is 1 hour with 25 minutes left. When price hangs and doesn't come back to test after this big gap, I interpret that as bullish, to be honest. Right, because it's telling me that the buyers, like look, our stochastic RSI is still making its way. It hasn't even flattened out yet. So,
the counter argument to that is I forget exactly what the name of it, but there's a trader that does the three candle reversal, where you get a big candle like you have here, without that's pretty much wickless, right? And then you get a candle next to it that tries higher and goes higher and fails, right? It's not over yet. The hour has to end.
Yeah.
But it's gonna, if it fails within the body of the previous candle, right? That third candle is gonna go down. It's gonna become bearish.
Yeah.
I mean, if you're a candle reader, I mean, I'd rather put stock in moving averages, but that is something that you can leverage and add to your tool belt. And if you go back and back test that, because what you'll see is, I mean, if you go back to like 9 p.m., where you can see where there's that big wick, and then it fails. It tries to go higher, right? And then the third one is right in the middle of that. Once it clears, down it goes. Same thing again on the next candle. Yeah. Big green body candle. Next one tries a little higher, wicks higher, but it doesn't close higher, and down we go.
And where does it find all of this action happening? Right at the upper value range. That's what's cool about it.
Very cool. Anybody got any charts they want to look at, or did you have a different agenda, Blunt? Or?
No, I always want to hear what
What do people got? Anybody got anything? It's weird. The weirder, the better.
Yeah, I ain't got nothing new, nothing special. No new layers. I haven't found anything new yet.
No, and you know what? To that point, I think we spend a lot of time looking for quote unquote new things that are supposed to be that's supposed to crack the code.
Worthwhile, right?
And maybe we should just be spending a little more time on the little things that can make us more effective in the here and now.
Absolutely. That's not what I meant. I meant from a ticker perspective, not from
I know.
Strategy.
I know.
Okay. Oh no, I like them both, right? Because I've been getting heavier into the futures trading, right? So US 30, NASDAQ, and a little bit of gold, and then I've been trading the Japanese yen a little bit at night. But no, I'm always trying to find another gem like layer. But I don't want to just put anything out there, right? I take the
No.
time to make sure it's worthwhile. I'm like, hey guys, check this out. It may be worth,
Hmm.
shorting or, just paying attention to it because it's running so hot and it trades nicely or
Yeah.
whatever. So
So, to your point about gold, this is gold. Why do I have these lines here? Because I was doing a little bit of kind of quick work for somebody, and the question was, up here, where's this going? This level was the 31.39. That was my first tag. Look what happened on today's candle. There's your tag, right? Um, where does it go next? Well, let's just analyze this gold chart based on how we would any other chart. There's our sell signal, right? We get the divergence that we always talk about. So we know that we're still in a downtrend. We've broken one level. We came back and hit the next, the 50, and tagged that other level, which is really easy to find, right? What am I looking for? I'm looking for benches of past price, the same thing I tell you guys every Tuesday and Thursday at 12 o'clock. And there it is. Happened to hit it. Now we have a green candle, right? So we hit a target level, and these are critical levels, the 50 in this bench in here. So we pop up, but we haven't even tested the 5 yet, or the T line for that matter. So the way that I would interpret this chart is that it is still bearish, right? Because all this is just a green candle in a downtrend, just like this was, just like this was. At this point in time, because we have no idea yet what comes next, this is still just a green candle in a downtrend that found some support at a previous bench in the 50 SMA. That's all it is right now. Where is the 200? Way down here at 27.84. And this is the daily, remember. Okay. Why are these levels seem so drastic? They seem drastic because price went essentially parabolic with very little retraces, right? If you have balanced price escalation with appropriate retraces, you don't get these big fan outs in different levels. They would stay tighter. But because we get those two things, this is the price we pay. So when we break a level and find the next, it might seem a little intense. And then once we realize this is how price behaves, again, this is the language of the market. Real-time representation of what price is doing, not what people are saying. And we can witness the behavior over and over and over again. The 200 being down at 27.88 will give some people a heart attack because that would feel like the sky's falling, which probably would feel like that. But as all that's happening is price is just returning to another appropriate level. So if you don't get support here to try and retest the 20, you got a problem. Let's assume it does get support and it does test the 20. Is this the first test of the 20 since it broke it? Yep. The first attempts typically fail or have a higher probability of failure? Yes, they do. Which then would be what? We've done this a million times, right? Now we're just doing it with daily gold. Okay, price is bouncing, tests, fails, comes back and takes out the previous wave's low. This test, all of the sudden of the 50, is not the first test now. You didn't test here actually, so came close but technically didn't hit it. But if this is the first test, then it would no longer be the first test on the pullback, and the probability of it holding falls because it's been tested before. And if you break one level, you'll find the next. The next level that I had identified is that 29.54. And obviously, if that doesn't hold, just like if this doesn't hold, you're going to look for the next level down here. Now, will it be 27.80 something by the time it gets there? Probably not, because time and price will continue to evolve, and it'll find itself a little higher. But it will find the 200. Price and time will come together. It's just a matter of when. And when we look at the weekly and take a little bit of noise, and take out a little bit of noise off the chart, gold has really gone nowhere but higher since 2019. And if you come back and test, this is interesting, I'm sure some of you have already seen it. If you come back and test, nightmare scenario, right? Break that level on the daily, you come back, lo and behold, what's this, the 20? So, okay. Makes me feel that this yellow level here is more likely. This is the first test of the 200 MA back in September and October of 2022. So if you do break one level, find the next, and you start looking for the 200, it will not be the first test of the 200 on that time frame. So the probability of it holding falls a little bit, just like it does on a 5-minute, 1 hour, 4 hour, or daily chart. Nobody wants to talk about these scenarios. Only serious people do. The ones that aren't serious, they're going to say to you, that's crazy, that's nonsense, you can't tell where price is going by this, that, and the other thing on a chart, blah, blah,
That's
blah,
called
blah,
hope.
blah. Yeah, that's
Hope
right.
dies.
It's called hope.
Hope dies. Listen, there's two things. Write these down. Hope dies last, okay? And hope is not a strategy. Once you understand those two things, just do what the chart tells you, man.
Yep.
Chart will tell you. And if you're in doubt, stay out, right?
Yep.
And don't force it. My biggest problem is I sometimes will force trades. When it comes together and then it just starts running, I'm like, all right, this is the right way to do it.
Yep.
The other times I'm kind of up, even guys that trade for a long time can get hopeful, right? It's like,
Yeah.
I think I'm close here.
Yeah.
Don't be hopeful. Hope is not a strategy. Hope's a name, a nice name.
No, that's
Maybe
it.
somebody knows a hope.
Yeah. So back in 2020, I know we've shown this chart before in here, but it's relevant to our discussion. So back in 2023 in the fall, oil was pushing $100 a barrel. I think it kind of hit 95, and everybody was really excited, right? The far right of this chart is really what I'm talking about up here, right? Now, as a technical trader, and I think, Ben, you'll know what I'm talking about, and there's a few others in here that do as well, is that the narrative is separate from what the money says, right? Narrative is interesting dinner conversation, but price is all
That's
that
like
matters.
sentiment.
Yes.
It's like sentiment, right? It's the same
That's
thing.
right.
You know what sentiment's for? Sentiment's for your wife, okay? It does that as well will do no good in any of this stuff.
Nope.
None.
And
It will do the opposite.
the narrative
Sorry.
up here was all 120, 150. The numbers are just going up and up and up and up. And you have to find a way to separate yourself from the skills that you have as a technician from what you hear. There's different ways to do that. One of them is just don't pay attention at all and just follow price on a chart. Now,
That's the best way to do it.
as some are saying, hey, 100 plus, here we come, I look at the chart from a macro sense, as I'm sure you do, and you start to go through your rationale and your methodology. And one of the things that I do first now is I don't look for the upside opportunity first. I look for the downside risk first, and then the upside opportunity second. Because when I started doing that, I think I started making safer, more profitable trades because I was being a little more aware, right, of what the chart's saying and what my bias might have been. But nevertheless, coming out of that, I look at this weekly chart for WTI at the time, and I'm like, I don't get what everybody's saying about $100 and some odd oil. I don't see it,
I don't see it either.
right? I don't see
I mean,
it at
I'd
all.
want to see RSI, but I don't see it
Yeah.
either.
Well, you just go candle by candle. Right? So my point was is that if this thing breaks down, ultimately I see $61.66. Well, does that sound batshit crazy up here? Yeah, it does. I totally acknowledge that. I get it. I get it. But current price revisits past, and you break one level, you find a next. And when you've done the analysis on the chart, and I've taken a lot of the indicators off for the sake of our conversation here, but once you've done the analysis on the chart, for me, I could not help but come to $61.66. Break one level, find the next. Break one level, find the next. And here we are. Like,
The price is right.
was $61.61 a real number? It absolutely was, because look what price has done to it since it's hit it, right?
What is that? The 100? What's
It-
blue? 100 or 200?
Actually, that's just my call out for 61.
Oh, okay.
66.
Sorry.
But ultimately, what was I using? Just the stuff we talk about in here. Break one level, find the next, look for that downside risk, blah, 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 and this. This. Now, somewhere, there's an institution that's paying somebody $1 million a year to do this stuff. And probably didn't see it. Or didn't know what it meant if it did. I don't know. It's like the guys in 2008 who said we're all stupid, but yet couldn't read their own charts. I'd love to have a conversation and a drink with you guys. Bring your best stuff. But nevertheless, the chart tells us where price is going. In order to figure out where it's going on the right side of the chart, you have to understand where the hell it's been. Simple or as complicated as that. So you got to zoom out, right? We sometimes spend too much time on short time frames, and we miss all these things. What was price looking for? Simple stuff, right? I'm just going to throw it all on here so that we can see it. Let's go to the daily.
Oh, I see. You took those off.
Yeah,
while you
sorry.
did your little thing there. Okay.
So
No.
that amber
I
line
didn't realize.
is 1,000 days of price action, and it means something, right? You break it, it's a problem. But because it's 1,000 days, it's telling you that it's historic, right? So you get support like probably 9 times, and then you break it, and guess what? Now all of a sudden, that historic price level is resistance. What's that look like on a weekly chart? Well, what do we talk about when you're trading above the 20, the 50, and the 200? Every week we talk about it. You better be looking over your shoulder, because at some point in time, you're going to come back and tag the 20.
Right, and you're paying a premium too.
And you're
You
paying
know,
a
just
premium.
know that going in.
That's right.
I mean, you can make money that way. Just this is great stuff, Blunt, because this is exit stuff, right? You can come in and still make money here. Just know that you might be limited, right? The chart's telling me it's limited. Not saying I can't make money, but it's not the world's greatest setup. And if it's not the world's greatest setup, then look elsewhere, right?
That's right. And to the point about what we were talking about earlier about setups, right? So once you're in a trade, how do you manage it? Now, it's been no secret what I've done since up here. Everybody who knows me knows this. And I've been challenged many times. Oh, you're going to close your shorts. You're going to close your... No. Shut up. I'll tell you when I close my shorts. Not closing my short. Not closing my short. Not closing my short. Still not closing my short. I have no reason to close the short. This is a weekly chart. I have no reason to even think about it. And if you really want to scare yourself, look at the monthly. Right now, this is just a green monthly candle and a downtrend at a level that nobody wanted to talk about, and everybody thought you'd be batshit crazy if you brought it up at the dinner table. Back here, right? But here we are. You don't think $51 is the target, or $50 is the target? Sure it is. Why? Because current price revisits past. Just like this was a target for logical reasons, now this is. And I've just kind of highlighted it all of this benching in here in gold, right? Cutting across, just averaging past price. And if it doesn't hold, look to the next level, and so on
look
and
how
so on.
below.
Look,
But yeah, that's a great highlight there, that bench, because that's a big thing. When price, especially on a weekly chart, price spends that much time in that area, that's a level. I mean, I'm sure if you scroll right, that's the point of control right around it.
yeah, it probably would be. Unfortunately, the volume profile gets all rastered on some of the commodities.
Yeah, the longer time, I noticed that anything longer than anything daily or longer, it gets a little wonky.
Yeah.
Anyway, go ahead.
But yeah, so it doesn't matter what you're charting. Everything that we're looking at will behave the same. And I know we look at it and it doesn't make sense sometimes, right? But that's just unfortunately what it does. This is where everyone's going to lose their shirt trying to short this now, right? Like, it's not worth it.
Don't even bother. It's gonna continue to go.
Yeah, and just to give you,
but you'll get a heads up, right? I mean, look at the 12-hour. When you start to get some turn in there,
yeah.
or even the 4-hour. All right, then you can start thinking. Don't even bother here. Holy smokes, right. You get eaten alive.
And look how price, like for anyone who's a naysayer, look how price respects the T line and the 5 EMA. So how many people tried to short this candle? Probably everybody. But, or I shouldn't say everybody, but a lot, right? But you see in here, see the divergence that's still intact? That's how we know not to do it. Impulse candle up, sideways back. Tag those levels, and
now she just
goes the weasel all over again.
Yep, and she just hit a new high, so who knows where she's going.
Well, I think we kind of do.
Oh, do we? All right. Well, good. I'll plan my exit. Let's see.
So, unfortunately, I took those levels off because they're just kind of getting in the way of the yellow.
All right.
I think. Yeah, let's take this. So one of the things that I like about the methodology using the T-line and the 5 EMA as a filter is that price has a tendency, for whatever reason, and we can discuss that in another day. I was always told because it's Fibonacci-like properties, but nevertheless, I think this is where we're going. Somewhere in this neighborhood in here. So what I'm doing is I'm taking the top, actually let me stretch this out even further because it's more relevant. This is what I think it wants, 171 and change. This isn't pin the tail on the donkey, this is
right.
A quick look,
but that's where it's spent a lot of time.
Yeah, because current price is looking for past, right? So you break these levels, and putting moving averages on here probably isn't going to be overly helpful because everything's going to go straight up.
No, it'll probably be cluttered, but
yeah, but nevertheless, so you broke through the 200 on the daily, right? You got a couple days of a pause. I guess that's really all we could call it. But it was one of those things that just went, impulse up, sideways back, impulse up, sideways, impulse up again. I think it's reaching for that level there. And all I'm doing is I'm connecting the tops of this impulse to the tip of that 5 EMA there as well, and then kind of cuts through all this little past price in here, trying to average it as best I can. But I think it's looking for something in this neighborhood. If it breaks through it,
220.
Yeah, 202.
Yeah, it's
like somewhere
tough
up in there.
Oh yeah, 2 okay. Sorry,
you're right.
I'm looking at a very small number there, and I thought there was an extra 2 in there. But yes, yeah, it's great. This is the stuff, guys, where I mean, I'm still working on this aspect. I mean, this is, it's lifelong learning, but this is where, okay, I got a runner and I've already made a fair amount of money, and the instinct is self-preservation, right?
Mm-hmm.
And you got to kind of squelch that a little bit. Obviously you want to have stops in, and I
Mm-hmm.
always put stops in. I mean,
Right.
that goes without saying. But here I'm hanging on to this because I definitely think we could see that 171, and then, if it starts to get some, stupid news on Twitter, who the heck knows, right? I mean, you can't predict. You have an idea where it may stop, but I don't know where. We don't know where it's going to go. Right now, it's bullish. So,
That's right.
you know,
But look, did we get, look where we started to get our signal right in here, oversold, boom, the Fisher gives us that real clean change in trend, and the moving average and signal line literally right at zero, and they pop.
what
Right?
is that? Fisher RSI? Is that what that is, or
This is called the Fisher transform.
Fisher transform? Okay.
Yeah, not a lot of people have even heard about it or use it, but I like filters, so I trade off filters, fractals, and fibs. And this is an example of the filter. So this creates a Gaussian channel that filters noise, and it really doesn't give you many false signals at all. Like, it shows you when it moves in a different direction, it's usually for real, and it filters out the chop. So I like
That's
it
interesting.
for
Because
trading. Yeah.
oh, absolutely. Well, longer too. I mean, I wonder how it is on shorter, but
Excellent.
it's like it's probably it seems like almost like a MACD, except just a little bit less volatile, right?
Yeah. Like, here's our Bitcoin daily chart. We have been saying for a very long time, okay, we got a signal. Like, when we've been doing these streams long enough now that we can go back here. So, we got a signal long. We knew that we would anticipate some resistance at the 50 or a failure. We got the resistance, but the divergence in the trend identifier, which I would classify as a filter for me, was telling me that the trend was still intact, so the sideways actions shouldn't upset me too much. Sideways, we get back to the T line, 5 EMA again. What happens? Boom. Impulse up. Sideways back. Impulse up. Even the little retraces, did they break this? Nope. Trend is still intact. Impulse up, sideways back to these levels. This is where you have the opportunity. So we're still bullish. We're trading above the upper value range now, and we're getting into this thin trading. So do we make a sudden push, try and test these highs? Possibly, right? There's still momentum here in this chart. So it's not an impossibility in my mind, and don't like the doji at the top of the weekly. That's creating a little bit of a double top. But this is all the premium on the weekly. The other one that we were watching, and I think it's real interesting for you guys to see this, is Lair. Lair did nothing but explode. Another example of where you would lose your shirt trying to short it, right? Thinking that every impulse candle higher was an opportunity to short, when in fact is all it was a red candle in an uptrend, because the trend itself was clearly still intact, right? And then at the top, like, look at that level. Isn't that kind of nonsensical? Like, tell me this is not.
4 times. It
Yeah.
probably a heck of a lot more than that intraday, right?
Oh yeah, that's probably 100.
Probably lived there,
Yeah.
for about a week.
But I know this is the daily, but what happens? Look where you're trading. I bet you a lot of people tried to long this candle in here. Massive impulse down that breaks the 50. Oh, you're going to get a snapback higher? Nope. The chart was telling you it was still down. There's your 4 hour, right? At no time in here, well, this is where people got to think they got the idea that they could long it. But what happened? You just got back to the T line and the 5 EMA and it failed again, right? The trend down continues. This is nothing but consolidation. You can take these signals, hoping that you get the move you're anticipating, but this one you would have been stopped out in, but not the short. If you were looking at the 4 hour and the 12 hour and daily, you would know, even on the 12 hour, that this chart wasn't breaking anything and it was still short. Even though the thing had been down probably like 80%, there was so much more downside to it. And this is where the market gets us. Right? This is where it comes back and bites us in the ass because we're in the wrong place at the wrong time. We think, oh, I know it's got to be ready to go up now. Price isn't going to be this low again. Buy the dip, right? Buy the dip. I love that. Buy the dip, right? This is not a dip. This is simply a falling knife. And you have to make the decision. First off, can you distinguish the difference between a falling knife and a dip? And do you want to be the one to drop the knife or to grab it?
Just don't even trade it. There's a trillion things to trade. Yeah. It's that when in doubt, stay out. You just keep looking. You don't need to have 50 tickers, but if you have 5 to 10, I bet you'll find something eventually.
Oh, absolutely. And as far as trading at the same time, if I get anything more than 3 on the go, you might as well just put me in a blender.
Yeah, you can't. I can't really do more
in different directions.
I usually just do one. I do one, and just try to get one. Just try to get one thing right, heavy. And build and build up that confidence capital. Right.
Yeah.
Each win you get, build your confidence capital, so that when the time comes and you see an ETHFI chart like this, the next time you see it, you come in heavy.
Yeah.
And you count money.
This is Apple's chart. And let me just kind of strip it a little bit. So what do we got? Just our script and a volume profile. This thing, there we go, this is going to help. This is the kind of chart that, I'll be honest, can get me at times, right? Whether it be, doesn't have to be Apple, it could be anything. Great example of a big move down, right? But everybody, it's one thing to say, oh yeah, I definitely would have longed the bottom somewhere in here. We say that, but in reality, you're wondering to yourself, I don't know, does this thing have more downside to go? Like, you'd be looking at the chart saying 165 is a real number, right? So you probably won't make the trade you think you will, right? But as price moves higher, and you see it start to get north of here, like north of the T line, again, this is the weekly, you start to think, oh, this is good. I'm going to get in early, right? This is the insurance I paid. I know I don't have a signal yet.
Early doesn't mean right.
Well, that's, yeah.
Sorry, I'm stealing your thunder here.
No, it's true.
I apologize.
Like, I have to, be honest. Like, I prepared this for myself because it really deals with a lot of my idiosyncrasies as a trader. But from time to time, I'm stupid enough to try and cheat my own thing, right? And every time I do, I get kicked in the teeth. And I'm like, why? What am I doing? Right? Like, why are you doing? It's not worth it. These are the pennies and the nickels that really don't matter at the end of the day, right? If I was to load up in long in here and be wrong, I'd be really wrong.
Expensive.
Right? Like,
it's expensive.
Yeah, like I'd be really, really wrong, because the downside risk is huge. I'm at a premium. I don't want to come back to 190, and I don't want to go back to 150. Right? That's the downside risk. So I want to come back to this Apple chart in a week or two to see what happens here, because this is where I typically make mistakes myself, and I'm sharing this with you because I want you to realize that you're not the only one that or ones that can screw up from time to time. I do it too, and this is typically where I would do it. I would try and cheat this move higher, and every time I do, I get kicked in the teeth. So now I wait. And again, this could be a daily, it could be a 15-minute, but this is what I would wait for this thing to confirm. And if I was really concerned about it and I needed additional validation, I know we've talked in here before about using a Heikin-Ashi method of trading, where you're using Heikin-Ashi candles. Heikin-Ashi candles basically have a look back, almost like an exponential EMA, and the calculation in the candle is a combination of the look back, right? Which is why they look a little bit different. Now, this is interesting. This is exactly what I want to show you. We've traded this before, right? We've talked about this methodology before. Let's say we want to go long, right? What are we looking for? In this case, we get a signal in and around the same time that we get a parabolic. That's what this is called, a parabolic SAR. And SAR stands for stop and reverse. So the Heikin-Ashi methodology that I use is that you wait for a parabolic to appear, if you want to go long, under the first green candle with no lower wick. So this candle has no lower wick, a parabolic beneath price, so that would be an entry candle. And it just so happens that it really does confirm with my script, which is great, right? So I would feel very confident about that move higher. And it's a quick and easy way for me to validate something that I'm unclear on. And if I, even coming out of this, to Ben's point, if I don't get the clarity I'm looking for, I'll just find something else to play with, right? You don't want to spend more time than you need to trying to figure it out, like you're cracking the Da Vinci Code or something like that.
Can you go to a smaller time frame? I see that's the weekly, and
Yeah,
it's pretty true.
There's the hourly, right? So
nice.
You like that? See what you learn here when you come in this room. So so what I'm trying to show you is that, like, we appreciate that this is stressful. Like, even when you're good at it, it's stressful, right? You don't want to make mistakes. Nobody wants to go into the dealership and pay too much for a car. Same thing here. You don't want to be that guy, nor do you want to make a mistake. So the script it keeps me out of trouble, right? It's a combination of all the stuff I did wrong, and the outcome is to try and keep me from doing that again, which it does. When I need additional validation on a trend or a trade, I'll use this. Flip the candles off too, right? We've talked about that. But switch to Heikin-Ashis, throw some parabolic SARs on there, and see what you get. Well, guess what? This candle confirmed what our script did. Our script got us out, and the Heikin-Ashis flipped over just basically at the same time. So you know how sometimes you exit a short and you want to go long right away? Like, sometimes there's consolidation that happens before you can really make that trade. Actually, this over here on the right is probably a good example of that, right? Up, down, it just can't make up its mind, right? The script, along with this Heikin-Ashi methodology, really does help you confirm. And it'll work on anything, guys. Like, this is Apple. Let's just go to Bitcoin because we can. Same thing. You see how effective it is? Now, here's an example. Sometimes the Heikin-Ashis will get you in earlier. Like, so here's an example of, green candle with no lower wick and a parabolic beneath price. The script got us in the following candle or two. Here's an example where the script got you into a short long before the Heikin-Ashi one did. But the takeaway is, as you're trading that, okay, you feel confident that you're getting, because you're going to switch candles back and forth probably anyways, but you're going to feel good about getting a sell signal. You're going to feel good about the divergence between the T line and the 5 EMA. So you're going to know your trend is good. And you're extra happy when your other confirmation shows up. So all I'm trying to do is just give you another way to help you feel a little more confident in the trades that you're making. Do I recommend using Heikin-Ashi candles all the time? Not necessarily. They're great for trend, but they're terrible for entries and exits because they're averaging past price a little bit. But I do like to use them in combination with this other strategy. So I hopefully that helps a bit. It gives you another bullet to put in your gun or another tool in your toolbox. Does that make sense?
Yeah, no,
Sure
I like
does.
it. I like it.
Guys, I have to drop to go back to day job land, but I wanted to thank Blunt and thank everybody for giving me the time today, and hopefully I can come back and talk some more trading, see where that Apple trade might have gone.
Yeah, absolutely, Ben. You know what? I think we're going to have you as a regular on here. Don't worry.
Oh, that'd be wonderful.
Yeah.
This is great stuff because just talking about it and going through this, I mean, the more reps, the more back testing stuff you can do. It's like anything else, right? I mean, people think it's just pressing a button, but you gotta, it's like a basketball player. You got to go and you got to get shots up. With this, you got to go and you got to get reps. You got to get back testing reps, and make it muscle memory so you see it and you do it, and then you go on a nice vacation. So anyways, I'm being beckoned. So I wanted to thank everybody again, and I will talk with all of you guys pretty soon.
Thanks so much, Ben.
Thank you, Ben.
All right. Thanks, guys.
Ben's a great guy. And you know what? Here's what I like about guys like Ben. For the rest of you to get some exposure to them is that I want you to realize they're just normal people. Like he's a regular guy with a regular job and a regular family. Who has found a way to not just make additional money, but probably get to the point where he could do it full time. Right? We all have that same opportunity, all of us, and it takes less than what we think or we've been led to believe in order to get there. Like when we had in David Nikoski earlier in the week, right? Like, there's an opportunity for you guys to realize that, hey, there are people that are actually doing hard work for the right reasons to try and not just make money for their clients, but protect them in times like this, right? And the market, all the people in the market aren't necessarily nefarious, with terrible intentions. We just have to be careful about who we take our information from. And what I like about people like Ben is he's just a genuine guy who, can share his own experiences and happens to be, bright enough to be able to code it as well. But all the things that we're teaching and showing or prepare as codes are based on some real simple stuff. Like very simple stuff. And it doesn't matter what we look at. This is the 10-year treasury. Did you get a buy signal in here? Absolutely. Did price go higher? Absolutely. Was the trade invalidated and a short created? Absolutely. It doesn't matter what it is. There's the daily. As crazy as the Bitcoin trading has been a little bit, it actually feels like it's been more volatile than it actually has been. And maybe that's just me. But this chart, it's still a bullish chart. Like it just is. And it is until it isn't. Right? Like we're not married to to prices, right? We're not. I think one of the tasks that I set out for myself years ago was to try and find a way to be indifferent to price, which is an easy say and a very hard do, because especially when I was first starting out, I was a little more attached to the assets that I would trade. Good, bad, good, bad, or indifferent. Over time, I learned that that wasn't necessarily in my best interest. The only thing that we pay attention to is the chart. I don't know much about electric cars. Don't know much about batteries or any of that stuff. All I know is that this stock has lots of volume and lots of volatility, and if you can do what you're told, you'll probably be okay. Find a way to short it up here when you're told to short it. And how long do I stay short? To Ben's point about how long do I stay in a trade? As long as the chart tells me to stay in the trade. That's how long. And that's the great thing about this methodology, is it does that for you. Am I upset that price went down? No, I don't care. I don't care. Invert the chart for me. Would it make you feel better? To me, it doesn't matter. Price goes down, you monetize the chart. That's your job. Like if you're watching this go down and your heart's breaking, then there's a problem. Watching that go down, the only thing that you should be experiencing is your account filling up, because you're indifferent to price, because you understand that the only job you have as a trader is to monetize the chart. It's not to send Christmas cards to CEOs or CFOs. It's to monetize the chart. No matter how much they tell us they care about us, I don't think they really do. All I care about is how much money can I make off of their chart. That's it. Whether I do it off a shorter time frame or a longer time frame, how about that for a long, right? That's back in May of 24. And you would have been in it for almost, till January 25. Why would you have been in it that long? Because the chart never told you to sell. That's why. It's not hard. It's as simple or as complicated as we want to make it. Price moves the same way, every day, all the time. It doesn't matter. Who has a symbol? Trying to think of what we usually look at. Solana is one.
I don't have a symbol. I have some commentary though, and maybe would like some input from you. So one of the things that I've been kind of battling recently is, transitioning over futures, right? And kind of Ben was talking about, now there's a cutoff time for me for trading, right?
Are you prop
So
trading for stuff?
yeah.
Okay.
So I've found it a little bit difficult as far as trying not to front run now because of that. Because I feel like, it's like, all right, well, I already know 4:10 p.m. That's the last time I can get a trade in. So I guess my time frames have shortened up too a little bit more. I've been trying to get in on 5 minute and 10 minute, uh, just because I guess I'm feeling like I'm a little bit more constricted, obviously.
Yes.
So I guess what are your what would you say to somebody who's kind of going through that right now? Just
So the prop trading thing is interesting. I have nothing against prop traders or prop trading firms, but the reality is that in many cases you have to trade differently than you normally do. So I know that you've already kind of found a rhythm and had gotten into a groove, and now you're trading a different asset, and you have some parameters around that trading that make it a little more complicated, and now you have to change that rhythm a little bit. So you're trying to learn how to trade futures, but you can't trade futures the way that you would normally trade futures because of the prop exchange restrictions. So you can't. Some of them don't let you hang on to a trade overnight,
Yeah, you
right?
this
Well,
one's just cut off. Like they'll close your position at 4:10, but you can trade again at 6. So it's only an hour off, and you can trade throughout the night. But your position does close at 4:10 Eastern, and then it reopens again for trading at 8 or 6.
and are you what are you trading? ES or Nasdaq?
Yeah, those are US 30 seems to be a little more predictable, right? Not anything too crazy, but Nasdaq, I've been trading Nasdaq pretty frequently. Nasdaq Gold, US 30, ES, and then like I said, at night sometimes I'll trade the Japanese yen.
Okay, well that's actually
But
USDJP.
I've been looking at US 30 as of recent. And then what I saw yesterday was there was a small gap down that occurred at right at 1800, 6 p.m. when it opened again. And what I learned about those from actually Stephen Bigelow, he's like, and this was a small gap down. It wasn't massive. There was one, I think, on Monday or Sunday that was massive, and you knew, like, okay, well, definitely get in. But anyways, so I got in on that pretty early. I made some profits, and then I guess it's the morning, right? I try to start
Mm-hmm.
waking up again at like 5 or 6.
Mm-hmm.
That way I can, see if there's any room to get in, if there's a signal, or if momentum has changed or shifted.
Mm-hmm.
That way I'm early on open, and I don't really have to mess around because it's like on open, you're kind of scrambling like, all right, should I go short? Should I go long? What's going on? And it's a lot of volatility right out the gate.
Yeah.
So I find myself trying to, see if there's momentum change and then get in early and then just relax. And I've been setting my stop loss. I've got a percentage of 0.25 that I seen that works for me so far,
Mm-hmm.
because I don't have trailing stop loss on this. So I have to kind of set it and forget it. So I've been going about 0.25% and it's been working. But sometimes I'll, if I'm looking at the chart, I'll psych myself out and I'll get out. And then I'm like, oh shit, it's going up again. And then I get back in and then I might lose everything I just had
Mm-hmm.
made. So,
Can you move your stop once you've made the trade, or do you have to cancel it and start again?
yeah, I can move it, but
Okay. It's in the
that's
middle
the
of the night.
thing.
Yeah.
I'll keep getting stopped out in profits, but then I look at the end of the fucking night and it's been nothing but green candles. And I'm like, fuck, if I would have just,
Yeah.
because I get in pretty early at the beginning. And I was like, if I would have just fucking left it and let it run the whole day, it would
Yeah.
have been good. But I keep playing the stop, all right, get back in, stop, all right, get back in, stop. And that's kind of irritating, frustrating. And I don't want to sit at the computer all day doing that.
No, and that's where. So I'm going to put you in touch with a friend of mine who you may or may not know already, and he has a lot of experience trading on those prop firms. And
Yeah.
I know that he had a lot of success at one time too. So he'd be a really good guy to talk to. But this is the same conversation that he and I had, where he was having to change how his trading, right, which was very uncomfortable for him. So he might even be able to kind of recommend a place where you can trade that's going to be conducive to how you want to trade, so that you
Yeah.
feel like you're actually learning and not making too many adjustments in the process. But I hear what you're going through. You're trying to shorten your time frames because otherwise you're going to miss opportunities. And then once you're in them, you're uber careful on risk, and your stops are too tight. They can't withstand the volatility. That's
Right.
But yet the risk of that volatility going the other way will ruin you.
Yes.
Right. So
Exactly.
yeah, I gotcha. Yeah. And
But yeah, no,
it's
I
it's a
appreciate it.
balance. Yeah, it's a balance. And
Yeah.
I'll put you guys. I'll connect you guys, and I'm sure he'd be happy to talk to you.
Okay, cool. Appreciate that,
Okay.
Blunt.
But I put the ES chart up on the screen, and last night I think it may have been 12:50 Eastern. I posted this chart, except it was basically that, right? And when we make a trade, you can't make it with the expectation that you bought it at the top and then it's going to find an all-time low, and you're going to go on and just buy a car and a house and retire. That's not how it works, right? It's an evolution of taking profit when appropriate. This was a trade that could have been made overnight, right? Actually, this entry showed up at 3 p.m. So kind of in the late afternoon yesterday. And over the course of the evening and into the morning, this is around 5 a.m., 6 a.m. there, it pulled back and found a bench of past price. So what I want you to do moving forward, and you may be doing this already, and if you are, it just means that we have to work on the entry and then the stop stuff to make it work for this new environment. Okay, but what I would do is, let's say you were looking at this chart last night, right, and you saw that sell signal. I want you to look for exits before you even make the trade. I know you a little bit, and I'm pretty sure that if you were looking like that, you would look at this level and probably put a sell in there.
Yep, I have a key level at 587575, so slightly above it.
It's basically, yeah, same neighborhood.
Yeah.
And you would have been successful, and if you probably would have had a stop. If I blow this up a little bit, depending on where you entered on this candle, but I think I would be looking to the left here, and you would see this base of tops connecting with these equal bottoms, and I think it would be reasonable to say that if price broke through that level on the way up, that would invalidate your short. Right, so that might have been an appropriate place to put a stop.
And see, I used to work just like that by just looking at the chart, but now I've really gone to very structured by percentages now, because I kind of went back and looked at all of the entries for short or long to see if they pulled back, how far were they pulling back before, continuing down or up. And most of them was like 0.13, 0.10, 0.14. But anyway, so a safe one for me was like 0.25. But I'm risking, it's nothing too crazy. I'm risking depending on how many contracts it is. But anyways, so yeah, that's what I find myself doing now, not just looking at the chart. But it's nice if it's obviously less than that, right? And then I feel more comfortable with making that trade. I'm like, okay, I usually do 0.25, but this is 0.13, so let's do it.
And the stuff that you're talking about really is why ultimately I want to automate this.
Yeah, that would be nice.
So that's kind of where I'm ultimately trying to go.
But yeah, you see that little, I think even in this, there's a little gap down at 1800 at 6 p.m. But even all the way to the left, you see that massive gap up. And like, your good friend Stephen Bigelow, I remember watching that YouTube video, and he says, anytime you get gaps up like this, it is like very, very high probability that it's going to continue whatever trend up or down that the gap has made.
That guy, for anyone if you don't know who Stephen Bigelow is, he's probably one of the better candlestick readers that you'll ever come across. I have a document that I'd be happy to share with anybody if you want it. It's basically the 12 candlesticks formations that you really need to know, and that you're going to see on a regular basis. But he is also uses the T-line in his trading methodology. He uses it a little differently than I do, but ultimately we end up in the same place. And the guy, if you go on YouTube, I highly recommend anything that you can find from him. I think he passed away, or I know he passed away about a year and a half ago. And I think one of the research firms or something are Meta Charting bought his stuff, so I'm not sure if it's still on YouTube. But if it is, get on there while you can, because it's really worthwhile. And he's just one of those older traders who cuts the crap and gets to the stuff that you need to know.
Yeah, he does.
Right? Like that, it was Stephen Bigelow and David Steele Smith Elliott had the same author, and they were good friends. And that's kind of how, my trainer was David Elliott, and Stephen Bigelow was one of his good friends, and that's how I got engaged and met him. So he knows what he's doing, or did. So who's got a symbol that we want to look at? I know we try and make sure that everybody gets something that they can review. Most of the crypto is red today, isn't it?
Yeah,
I
how
haven't
you
even
reading
looked.
that?
Thanks. Who was that?
Yeah, that was me. That's me. Really. Yeah.
You have a question? No? Are we still there? Looks like we're connecting again. Looks like our chat has disconnected itself. So maybe what we need to do for the time being is we may have to call this if we don't reconnect in the next minute or two, and see where we go next time. And I don't think we're coming back. Does not seem like it wants to reconnect for us. So what I'm going to do is I'm going to end the stream, and we will see you next week on Tuesday at 12 o'clock, and we're going to have some special guests, and you don't want to miss that one for sure. Talk to you soon, everybody, and have a